Hello, everyone. My name's PK, and here I have Tejas Thacker, who is a property investor. He's a client of the Property Investment Accelerator, and he's bought five properties in total, three after doing the course. He already had some before doing the course. And in this episode, his modus operandi is really to try to help as many people as possible. And we were just talking before I hit record of what we could talk about to try add some value to you guys. So we'll talk about his journey. We might go into how he's structured his properties, how he's been able to get the requisite borrowing capacity to buy this many properties, maybe his portfolio structure in terms of total debt levels, equity levels, cash flow positions, how he's based in Melbourne, he's an IT professional, how he's bought interstate and done that confidently, all these different things, and we'll go down different nooks and crannies on his mindset and tactics and strategy as well. So it should be a really useful, interesting, and valuable session for you to be a part of. And thank you so much, Tejas, for making time.
For having me, PK. I'm really grateful to be here.
No, I'm very grateful for you to be here. Well, let's start from the start. Like, you obviously already were a property owner before you did the course. Like, when did you buy your first property in Australia, and how did you go about doing that?
Yeah, so I recall my first property was back in 2014, I believe. I don't hold that property anymore. But yeah, it was a townhouse in a suburb called Glen Waverley in Melbourne. It's a really premium suburb, and it's really popular for the schools and everything like that. Yeah, so basically, I was renting in the area, and I was sick of renting and sharing my home with people that I don't want to. And I thought to myself, maybe I can just buy a property and then I can rent the spare rooms, and I can decide and I can have control on who stays with me. So that's how I actually got into property. And yeah, so that was my first purchase. It was about 500,000 townhouse in
Uh-huh.
Glenview. Yeah.
2014, so like that would have had a lot of good growth after you bought it because that was right at the start of that Melbourne boom.
Yeah, yeah. Yeah, so when I sold the property, I think it was about 650 or something. So yeah, decent growth for a townhouse. But obviously, I didn't have any education, or I didn't know what to look for in a property. I just bought something because it was in my budget, and yeah, I just did it anyway. It was really close to the freeway, and yeah, the electricity poles and everything, so it wasn't a great location.
Yeah.
Uh, Bad pocket, but good suburb, and it did okay for me. So yeah.
Right, right. And just on that point, there just do you think, I mean, you have a first-hand experience. Did you think that it performed just as well as the suburb? And I'm just asking this question because, some people say suburb selection is all that matters. And some people say, well, no, you have to buy in the right suburb, but also in the right pocket of the suburb. Whereas other people say, look, that doesn't matter at all. As long as you've found the right suburb, property selection is not so important. Based on however many years you held that, did you find that it actually tracked against the suburb performance pretty closely?
I think it underperformed overall if I look at the suburb, just because, as I said, Glenville is really premium, and people don't want to stay close to freeway. In this that whole section that my property was located in, it was just all townhouses in that street.
Mhm.
So there was just too much supply, basically, and there was always one townhouse or two townhouses on sale on the street. Yeah, so too much supply for those type of properties, and I think that wasn't an ideal choice. But given my budget, I couldn't have afforded a freestanding house.
Right, right. Cool. And so what did you do next? What was your next property? When was that?
Once I saw some growth on this townhouse, I thought to myself I should probably invest in another property. And I bought land in one of the western suburbs of Melbourne, which was really typical within my friends and family, and everyone was, sort of buying land and constructing their homes. And it was quite cheap as well at the time, unlike, today, construction costs are really high. So I think I bought at the right time again, and yeah, I think it had some significant growth since then. But yeah, it could have gone wrong, to be honest. But yeah, I was just lucky, I think, for that one. And yeah, it's getting good rent and everything. But I didn't increase the rent on that property until I did the course because it's really important to have that knowledge and have the right property manager. I didn't have a property manager before as well, so I was managing it myself. So yeah, it makes a lot of difference once you know.
Right.
Yeah.
When did you buy there? And like how much did you buy for and what is it worth now? If you don't mind me asking these questions.
Of course, it's all good. So I bought the land for I think 200,000, and then I did construction for about 185. So yeah, so it was 385, and I think it might be worth close to 700K.
Right. And that was around 2017, 18, 19
I
or
think it was 16, end of 16.
16. Okay. So what is it like doubled in 7 or 8 years, something like that?
Yeah,
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 it's not a bad outcome by any stretch of the imagination, and we definitely can't buy in those areas, at that price
yeah,
anymore. It's a
yeah,
good case study. They're just like there's a lot of migrants, especially from the Indian community subcontinent area, that because of the affordability of western suburbs, Tani, Truganino, there's many in the western parts of Melbourne. They gravitate there for living purposes, which is great. And then naturally, because they live there, they want to invest there, and because people like yourself, who've made good money in those areas, then there's kind of like this self-fulfilling prophecy that oh yeah, like why buy interstate? Why do anything fancy? Let's just book a land here. Everyone, all my friends, colleagues, friends have made money. Let's just do that. You're obviously like very experienced now, and you've got many more properties, and you've been sort of helping some people as well. What's your perspectives on Western Melbourne? Like knowing what you know now, would you buy in some of those areas right now, whether it's established or brand new? Because there's a really compelling case. They talk about Melton being the next Parramatta. They talk about, the rail line. They talk about infrastructure projects, population growth, etc. So it's really compelling. But what are your thoughts on that?
yeah. I mean, when I bought my property, I think it was the right time. And yeah, the markets were growing. But at the moment, I don't think it's a good choice to invest in Melton or Tarnate or any of those western suburbs because the supply is just too much. And yeah, most the construction costs are so high that by the time you add the cost of construction and land, you're paying like 800K as a minimum, I would say, for a decent sized block and a standard home. So it doesn't really make sense to me. And I don't recommend anyone buying in these areas at this stage. There are opportunities in Melbourne though, but definitely not these suburbs. Yeah.
Right, right. It's very, I mean, I've been saying a similar sort of thing since about 2021 about those western suburbs and sort of against the grain, against the tide, as you know. And look, there's always a time to buy in every location across Australia, and I think this is not the right buying window. I'm just echoing your thoughts on Western Melbourne at the moment. All right, so you have these two properties. You probably left some money on the table, in your own words, with the first townhouse. The second one's done pretty well. Like now you had some momentum. Why did you decide to do the course?
Um, so basically, after these properties, I purchased my PPOR, and then I had maximized my borrowing. So I wasn't active for a couple of years. And then, yeah, once I had the deposits and savings for the next purchase, I was ready to buy something again. I actually did a bit of investment in like trading and stocks and everything, but that didn't work out for me well. So then I thought I need to do something. I can't just leave the cash in the bank.
Right,
And yeah, with the inflation, it's not really, generating more income for me anyway. So I'm losing money. So that's when I've yeah, started looking into investing in property again. And because Melbourne's so expensive, I couldn't afford anything with my borrowing. So, and I wasn't prepared to sell my existing home to buy another home. That wasn't making sense as well because it had good cash flow. So yeah, so and then I started watching a lot of content. I was already listening to a lot of podcasts and stuff, and then I yeah came across your YouTube and Spotify. And yeah, I think your content really resonated well with me and what I wanted to do, and it made me look outside of Melbourne and invest interstate.
right,
So yeah.
right. And I suppose what was like the biggest challenge because you'd bought properties locally in Melbourne before? What was like the biggest like headache investing interstate? What was like the biggest challenge or obstacle that you faced in doing so?
Um, yeah, with investing into state, obviously I wasn't confident at all initially, but when I did the course, I think things were coming into place, and once I knew the process, it was still challenging to sort of pick up the phone and talk to this professionals, sales agents and property managers, and doing all the due diligence for at least a couple of months. I was doing stuck in the analysis paralysis. So it was challenging to shortlist the suburbs, and then having that confidence and going for it. That didn't come really quick, but once it did, then I was able to execute, and then buying second, third property, it just got easier, and then now I'm buying for others. So yeah, it just gets easier with time and experience. Yeah.
Right, right, right. Makes sense. And you've bought in WA, you've bought in Queensland, most recently you've bought in Victoria, which is really interesting because Victoria has been in the doldrums for a few years since sort of the start of COVID because of a lot of economic policies and just the health of the state budget. It's not been doing well, and land tax is quite high in Victoria. I want to get to that Victoria one, but just on the Queensland and WA ones, both of these locations where you bought are really hot. And I'm sure or a lot of people who are watching or listening to this episode will be like, "Oh yeah, I've tried to buy in Perth and I've been missing out, or I've tried to buy in Queensland, whether it's Brisbane, Toowoomba, Townsville, Rockhampton, Mackay, Gladstone, different places. People, probably using their own strategies to try to buy, missing out because it's such a hot market, hardly anything for sale. What was your experience in terms of like how did you get these deals over the line? Because it seems that you ring a sales agent and they don't care because they've got all these other people ringing them, and it's like the easiest job in the world for them right now. So how did you, beyond just normal suburb selection, use data, property managers to buy interstate, inspect the properties, etc. How did you actually just get it done, if you know what I mean?
Yeah, of course, we can get into that. Yeah, definitely. So whenever I find a property that I like, I always pick up the phone, and instead of emailing or through the real estate, I just like to speak to agents and find what the motivation is for the seller. And if I find if there's a distress or if there's some sort of urgency for the seller where they've purchased another home, for example, and they need to move and they need to sell this property. If it's a must sell or if there's some other distress involved, I've tried to find these type of properties where I know I have greater chance of my offer getting accepted. So that's how I find my deals in hot markets, especially like Townsville and Perth. So yeah, with the Townsville one, the agent wasn't that experienced as well. He was quite young. It was just a small family real estate agency, and the agent was the son of the agency owners. So he was just they hardly have any listings in Townsville. So this was one of them. And then I found that the vendors purchased something else. They were moving out. And yeah, so I thought I have a good chance if I, put in a lowball offer. And yeah, that's how it was actually listed for, I think, 369. And then I put in an offer at like 330. So after some negotiations, we finalized that I think it was 342 or something like that. Yeah, 345 maybe. Yeah.
345. And I think it was or you rented it out for 430. When did you buy this and how much, like, have you had it revalued or based on the comparables? Has it had much growth since then?
Yeah, I think it had significant growth. And the rents are also going to increase once we finish the 12-month term. I'm expecting it to go up to at least 480, if not 500.
Mhm.
And yeah, sorry, what was the question?
Just asking about the growth of the property as
Oh,
well,
yeah,
because
yes.
I don't know
Yeah,
if you've been following the market or whatever.
no, I have been actively buying for others in the market as well, so I'm really closely following.
Okay, yeah.
I think a property like this one would probably go for 40, 50. Yeah, in the current market conditions.
444. And how many months have elapsed since you bought it? Just to be able to get a gauge of
So it settled in mid-October last year.
mid-October. So we're recording this in July. So under a year, like what is it, like 9 months or something? 9 months, $100,000 gain. I just posted on my Facebook group today to just how, according to Core Logic, Perth property prices right now on average, just the average, right, is going up $1,000 a day. $1,000 a day. I mean, I don't want people to get FOMO, but that's the reality of what's happening. And I'm
Yeah,
sure your one down in Mandurah is which is the second one through the course that's doing
yeah.
really well as well. That was bought for 455, if I'm not mistaken. The rent was 550. Let me ask you this question. Everyone and their dog is trying to buy in Perth or, the WA kind of region more generally. What do you think it is that is setting apart people who are failing to buy or buying the wrong type of properties out of FOMO in WA versus people like yourself, perhaps, who are educated? It- w- Maybe a different way to ask this question is, what do you think people who are uneducated are doing wrong? Or had you not done the course, had you not invested in your mindset and education, what are the types of mistakes that you yourself could have been making right now in trying to buy in Perth?
Yeah, Perth is really crazy at the moment. So buying for anyone is challenging, to be honest. But with the right mindset and persistence, I'm sure it can be done. It's possible, and many people are doing it. So if I didn't have the education, I probably wouldn't be valuing the properties correctly, for example. And there's a high chance that I would be missing out on properties because of that reason alone. And yeah, the other knowledge that I have, the experience that I have from my previous purchases, helped me a lot buying in Perth as well, dealing with the sales agents and yeah, finding the right property manager to get the inspection done. This one that I bought in Perth, the property manager luckily was from the same agency as the listing agent, so I was able to get the video walkthrough pretty quickly on the same day, and then yeah, I was able to put an offer and got accepted. Yeah.
Right, right. And did you
It did
find
need some work done, so I had to put new blinds and some other small things. But yeah, it was a nice property and good size block. So yeah, I mean, it really made sense for me. I always look for something, like subdivision or things like that, some sort of X factor in the
Mhm.
property. So yeah, it was yeah, ticking all the boxes for me.
Got it, got it. Did you find that because the property manager was from the same agency as a selling agent, sometimes there's a conflict of interest. Like, how did you work through that, or how did you build confidence that the property manager wasn't, putting wool over your eyes, or the sales agent wasn't putting wool over your eyes, and they were kind of colluding in the back just to be able to sell you this?
That's a really good question. Because I already had built that trust with the property manager, and I know he's genuine and he wants to help me.
Mhm.
Um, yeah, I was confident that with all the feedback that I had from him, yeah, it was a no-brainer. The property was the right property. Yeah. I had similar situation for a property that I'm putting an offer on in regional Victoria at the moment, where my property manager is from the same agency as the listing agent. So he's actually giving me insights now as to, how many people came in at the open home and what sort of interest they've had and stuff like that. So he's actually sharing insights with me. So if you build relationship with the right person, then they'll actually help you and you can trust them.
Right, right. It's good to know. Good to know. And you touched upon the valuation methodology that we teach in the course, of course, and how a newbie that is not educated is probably going to be missing out on properties. Could you just maybe elaborate on that for the benefit of everyone? Like, what do you mean by that? And maybe what's like one tip that whereby people can value properties better so they don't constantly undervalue them, of course, don't overvalue them either.
Yeah. So I think the best way is to not just go by RP data or just the desktop valuation. So as long as you have like at least five, I go with five comparables for any property that I'm valuing as a minimum, and with sort of properties that are very similar in terms of condition, block size, and or the configuration of the property. And I also look at some high-end properties and low-end properties that are better or worse than the subject property. And then based on that, I come to a conclusion. And I try to make sure they all have same features, so it's easy to compare. And not include properties. For example, if I have a standard property and the comparable has a swimming pool, etc., then that's not really a good comparable for me. Yeah.
Right, right. That's a really important point. I know this is kind of in the weeds, but I see so many people that are just going on different websites or paid services like RP Data and just taking the value that that software or the website spits out, but you really can't trust that. And there's really no substitute for rolling up your sleeves and doing the hard work, as you're saying, Tejas, in terms of finding those comparables, ideally within a month, of sale, really recent, hot off the press, and using those as a true reflection of what your property could be worth. And if you do that, then that's exactly what valuers do. It's not that you have any disadvantage as long as you know how to do that. All the factors to consider. It's not just one or two, there's multiple, as you say, and including qualitative factors, which can't be picked up by algorithmic, softwares or websites. So I think that's a really important point to stress, and everyone needs to do that themselves. It's nothing can replace a DIY approach in terms of valuing properties. And I want to just finish off and just I think just sort of churn a little bit on your last or your latest purchase, which was in regional Victoria. We won't give away the location because we just started investing there, with your permission, Tejas. But what's giving you, let me ask you two questions. One is what's giving you confidence in Victoria again after so many years of being hit by COVID, hit by lockdowns, hit by state budget being in deficit, hit by such ordinary economic performance. That's the first thing, what's giving you confidence in some parts of regional Victoria. And the second thing is land tax threshold. Yeah, it's basically nothing. It used to be something, now it's basically nothing. So that if you're a property investor in Victoria, you're almost from get-go having to pay at least $1,000 in land tax. So how did that weigh in on your decision or in your mindset when choosing regional Victoria for your latest investment?
So with my latest purchase, it's a SMSF purchase. So basically, the other factor was that I already did my previous purchase in WA and Queensland. So I just, from diversification perspective, also I was looking for a different location. And also I was looking for a cooler market. So this is what led me to explore other regions. And then in terms of what gave me confidence was the data and my numbers in terms of cash flow. So my purchase was, I think it was 352 or something, and then it's currently renting for 440. So that's a really decent cash flow in regional Victoria, or Victoria in general. I don't think you get that sort of cash flow easily. So yeah, that's what gave me the confidence to go into an auction and buy the property. And again, as I mentioned before, I always look for that X factor, like a corner block, side access, subdivision. So this was also ticking those boxes. The vendor was really motivated and in distress. So yeah, it was perfect for me. Good
Right.
opportunity. Yeah.
Right. And I must say, this isn't in some tiny little township in regional Victoria either. This is a large, regional town with tens and tens of thousands. I don't know the exact population size off the top of my head, but it's very large and commutable to Melbourne.
Yeah.
So this is a terrific purchase. Did I hear you correct? Did you buy this in auction?
Yes.
Oh, what was that experience like?
Uh, it was fun. There were only two other bidders, so it wasn't very competitive, but it did go above my expectation. I was hoping to buy the property between 330 and 40, but I ended up paying a little extra, but it was still under the market value, so which was good. Yeah.
Right, right. And look, it's always difficult to say, but I remember back in very early 2021 when I was producing videos on Perth and a lot of clients started buying in Perth. We were entering Perth with confidence, but some level of trepidation as well because we're early, like no one else, including I don't think there was a single buyer's agent at that time from the East Coast buying in Perth. So, it was with quiet confidence that we had started to purchase in Perth back then. And then, of course, the rest is history. A lot of those properties have almost doubled. I hope and pray that in regional Victoria is a kind of a similar thing. Of course, we were buying in this exact location up until about 2021 as well, starting in 2017 or 18. And now it's kind of corrected. It's had its sort of consolidation period, and now the buying window is just starting to open up. So hopefully, Tejas, we can look back at this in 2026 or 2027 saying, remember when you started buying in 2024? And we weren't like 120% sure, but we were like 95% sure. And I hope it pays off. And look, that's honestly, I'm not here to say, and I think nor will you, Tejas, that we can perfectly predict the exact next hotspot that will go up double in 2 years. But using data, we can do the best with what we have. And there's really no better methodology than if you use a wide plethora of data sources and you know how to interpret them. In terms of going forward with your own personal portfolio, Tejas, like what's the plan? So I think is it five? I think you sold that townhouse, or how many do you have in total right now, including your PPOR?
Yeah. I have 5 properties in the portfolio at the moment.
Five,
Yeah.
five in your portfolio. What's the plan for the next 10 years for your own portfolio? Like, do you have some sort of I don't know what your current portfolio value is. Are you looking to increase that by 2x, 3x? What's the long-term strategy?
Yeah, definitely. I have plans to buy at least 2 to 3 more properties and add it buy and hold, basically. But I have other plans to, excuse me, I have plans to, buy and flip the property as well. So yeah, that I'm looking out for those sort of opportunities as well, where I can add value to the property and manufacture some equity instead of just relying on the growth. Yeah, just my holding.
Right, right. And I think that's always like you said many times, you're looking for properties with side access for granny flats or subdivision or et cetera, et cetera. And I think everyone should be doing that, even if they don't have the confidence to do anything about it right now. But having that property with that latent value add potential will only serve them in the future when they do have the experience and confidence to pull the trigger on something a little bit more complicated and make a bit of a chunk profit or flip it, like you said. Maybe last question, because I did allude to it at the start. If you don't mind, I don't know if it's too personal. Not everyone, just off the street can go off and buy. I mean, it's not like you bought them in 1 year. You spread them out over many years, but how did you like what was any borrowing capacity should I say strategies that you deployed to be able to get this many and then in the future get another two or three, like in terms of your borrowing capacity, how did that work? And then also like what entities did you buy these properties in? Were they in your own names or were they in different trusts, etc., or maybe there's a interplay between those two questions?
Yeah, so all the properties that I've bought, most of them are in personal names, except for the most recent one, which is under SMSF. But the next purchase that I want to make for buy and hold strategy would be under trust, because I do want to preserve my borrowing capacity for future plans that I have to, reconstruct my home, the PPOR property. I would like to build a home for me and my wife. Yeah. So yeah, that's my strategy going forward. The properties that I'm going to buy for flipping, I'm going to be buying in a company structure.
It's always a good idea to stack strategies, like a lot of people who are developers, they do my course to make sure that they can pick the right locations to do the development. And then, like you've just said, a lot of people do my course to pick those locations, know how to renovate, but then they want to supercharge things and then flip them. Higher risk, higher return potentially, and then they continue their learning. So maybe my final question is, for anyone who's on the kind of fence about doing my course, or let's say any course, like any decent course, but they're like, because normally in Australia, real estate courses range from, I mean, ones that are actually effective, not just lip service, they range from kind of 5,000 to, all the way up to 20, even 40,000 for development courses. For someone who's kind of considering self-education like that, but they're like, look, it's really expensive, and this money is coming out of my deposit for my next property or for my first property. I'm struggling to justify the cost. Given you've done mine, and also others, what would be your advice to them?
Yeah, my advice is that, don't just sit on the sidelines, get educated and take action as soon as possible, because you're losing time. It's an opportunity cost. The money sitting in your bank isn't helping you. If you got the money, the deposit, then yeah, I would say just take action. Watch free content, build some trust. If you have any doubts, speak to people who've done the course, uh, get their feedback. There's so many ways. If you're on the fence or unsure, I've had people reach out to me asking if the course is worth it, etc. And I always try to help them and build that confidence so they can take that next step. Um, Especially after you posted the deals recently. Yeah, so I think it's really, really important. I can't stress enough how important the education is. because otherwise you're just risking your money. And if you're just investing without any education, then you don't know what's going to happen. You may end up losing a lot of money. So investing a small amount of money for education, it's really small in comparison to your property purchase, or the money you could potentially lose could be even more than the course fees.
Right, right. And yeah, I mean that's certainly true, and I always like to put a positive spin on it as well. Hopefully, there's an incredible return on investment on that course as well, not just preventing you lose money, but actually make money. But I always recommend, like you said as well, start with free content from a diverse set of sources to then make your own conclusion about which area, which course, etc. you're really going to deep dive and commit to. Well, thank you so much, Tejas, for making time today. Congratulations on all your properties. You're, of course, helping folks as well. And I always like to say when you help people, a teacher gets to learn twice. I'm learning for the first time for myself. And then when you help others, you get to learn twice. And I feel teachers become extra astute at their subject matter because they're always thinking about it and they need to be able to articulate it in a way that's easily understandable for everyone else. So it's a real pleasure to have students and clients like you, and as I'm sure you feel about the people that you're helping as well. So thank you so much for your time and congratulations.
Speaker, it's been an honor to be on this call, and I just want to express my gratitude as well for all the mentorship and the education that you're providing to people. It's truly life-changing. Yeah.
Thank you, Tejas. I really appreciate it. And thank you, everyone who's watching or listening. I hope that you listened to Tejas, absorbed his kind of mood, his kind of determination and precision in which he's doing things, and hopefully you can emulate it. There's more than 150 of these client interviews on my client results playlist on YouTube, and like I say every single time, I honestly don't mind if you do my course or don't do my course, but please go through them. There's days worth of content from clients. Learn from them, be educated, be inspired, and then take action with or without me. Obviously, love to help you, but maybe I'm not right for you, and that's okay. The most important thing for you, take action for yourself. All right. So make sure you do that and you'll pat yourself on the back in the future for it. Hit the subscribe button, give it a like, share it with at least three people who agree or may vehemently disagree with anything Tejas or I have said. Share it with everyone. And thank you so much again, Tejas.
Speaker.